The Hong Kong market, well, if you look at the average the average prediction going forward, the Hong Kong market should do fairly well. We would say anywhere between 10-20% increases on a yearly basis, simply because the Chinese market is growing at such a pace that, as a rule of thumb, if the economic growth is, say, 7%, the market should grow by double that, by about 14. So if we take a range of between 10-20%, that would be about right. Yeah, the question was, there's a lot of money here parked in Hong Kong, and the thinking is that a lot of that money may go into the developed countries. It is true that because of the performance of the U.S. market and a little bit in the European market, mainly the U.S. market, and Japan, money will flow into those markets. But on the other side, there are many U.S. institutional investors who were heavily weighted in the U.S. market. The U.S. market has gone up a lot. That means they have now become overweight in the U.S., and they have to diversify. So you're going to see some of that money coming back into Hong Kong, Korea, Thailand, all these emerging countries. We, for example, have seen sort of a flat, net flow into funds.
So
And we believe that will go positive.
do you see it will be an impact on the stock market?
Yes, because as that money comes in, prices will rise. The only drawback now is the number of IPOs. There have been a lot of IPOs in emerging countries, particularly in China, and that tends to depress the market.